So welcome to the spaces, the Twitter spaces today. Thank you all for taking time out of your evening to join us today. Today, as usual, we're going to talk about economics, personal finance, and of course, the economy. And we have a guest today as well that's going to just take us through what's been going on in Q1 of the economy, what's going to happen in Q2, what's going to happen in February and March, and then most importantly, where can we invest? If I have like ₦1 million, where can I put that money to work for me after listening to how the economy is doing and all those factors? So today I have Ayodeji Ebo. He's an investment professional. Ayo, can you hear me?
Hi, Kanu, I can hear you clearly.
Excellent. So welcome to the
Good
Twitter
evening,
Spaces.
everyone.
Yeah, thank you so much, sir. Thanks for accepting to be a guest today. We're just gonna go right at it, if you don't mind, Ayo. Let's just have you introduce yourself to the guys listening, and let me just apologize, guys. Twitter Spaces, I would accept if you want to speak. I'm going to add you to speak. Say after the first 30 minutes. Twitter sometimes has clicks. Last week we couldn't add anyone. This week I will try to add people and then we can speak. You can send me a message via DM if you want to ask a question, and I can ask Ayu as well. This is recorded, and I will also have this recording on the podcast, so you always have this to go back to and reference. So back to Ayo. Ayo, could you like introduce yourself to the audience so that we just know who you are?
Okay, thank you. My name is Ayodeji Ebo. I'm an investment professional, and I'm more into economic business and investment research. So I do more of engaging retail investors, providing financial literacy, and as well as also showing investors the opportunities within the investment space.
Excellent. Thank you, sir. And let me just say, if you don't know Ayo is my fixed income plug, right? So Ayo always sends treasury bill rates, the yields and all that. And I use that literally just to see the direction of Nigeria's risk-free number. So he sends that out almost weekly or quarterly, and I grab that and I just use it to do my narration. So Ayo, thank you for accepting. Ayo, let me just lay out the economy, the global economy for you, and also the Nigerian economy for you, right? So 2022, brand new year, COVID, which is what was a big economic driver. We now have the Omicron, and it looks it's not as deadly as anticipated. So it's becoming basically everyone is getting it, but we're not falling sick. So the economy looks to be reopening. And we can see that in the rates. The Fed rates going up. The US Fed has said they're going to stop tapering, which means they're going to stop buying bonds, which has the effect of raising rates, right? So that's happening across the board also in Europe. Rates are also going up. That is also bringing in inflation globally. So in the US, inflation is about 7%, right? And all this dovetails to say, how does this affect Nigeria? To me, when the economy in the world opens up, that means people use more crude oil. And Nigeria, of course, sells crude oil. So a reopening of the global economy means a reopening of factories and cars and ships, planes that use crude oil. So, of course, the World Bank has said Nigeria's GDP has been revised upwards from about 2.4 to about 2.5. IMF says it's going to be 2.7. They've kept that flat. So let me get your view on what's happening globally in terms of the economy and how it then affects Nigeria. What's your take, Ayo?
Okay, thanks. And thanks for the opportunity to speak to the audience. And it's been an interesting and eventful January for the global economy. We could see when you spoke about the US Fed, and it became more glaring that, or more obvious, that the tapering is going to come faster than expected. I think it's currently being projected that we may have about 6 rate hikes, which would be very significant. You spoke about inflation at 7%, which is like the highest since 1982. And we've seen how that has impacted on prices of stocks as well as even crypto, because there's been increasing correlation between the movement of the stock market and crypto in the past few months. And we see that volatility, stocks have lost even close to 50, some even 100%. And we know the implication of this is that, or why people are trying to also exit stocks, is there's a negative relation or inverse relationship between the fixed income market and stocks. So trying to break that down is that once we expect that the interest rate will be high, it means that fixed income will become more attractive. And as a result, there will be reduction in exposure to equities. Also, even for the companies that also play within that space, it means that lending rates may also go up. So their cost of finance would also be higher, and it means that they will be less profitable because finance cost comes before your profits. You are after your taking out other costs. So we can understand why we are seeing that major sell-off within the equities market across the Nasdaq. We could see the S&P, and that has really affected the market. Though there was a bit of respite when you look at in terms of the number of jobs that were added. I think about 460.
That was very surprising. That was very, very surprising.
Which against the forecast of about 150,000. So that also shows that the economy is growing, and even the impact of the current variant of COVID is not as much as been as expected. So I feel that is also positive that the economy is also trying to grow, and this further buttresses the reason why the Fed may also want to have that confidence to increase the interest rates. The economy is matured enough to be able to absorb that. So that's and we're going to link that to the implication. How does it affect emerging markets, which Nigeria is one of, or even we talk about the frontier market, where Nigeria also belongs to. So most for foreign investors, they're always in search of yields. So once you begin to see higher interest rates in the economy, there's what we call the country risk premium, which is just like the additional return that you want to ask for because you are going out of an area where you don't really understand, and there's a bit of inherent risk. You don't really have control over what may happen. So if I invested at 1% in the US, if I'm going to go to another country, I would be requesting for higher return because I'm going to a jurisdiction that I really don't have much control over. So I need to ask for a premium. So you would see that country risk premium that would be required. So what we would see is that in most of the emerging and frontier markets, one, there will be a reduction in capital flows to those countries. We may even, first of all, have for countries that are heavily exposed to foreign investors, we may begin to see them exit their markets to other markets. And why did I say that? For those that are heavily exposed, for Nigeria, since the FX illiquidity in 2020, a lot of the foreign investors already exited the market. So we are not anticipating that we would see a lot of the exodus of foreign investors as much as we saw between that 2020 to date. But for some other African countries that are really still exposed. So what would be in the mind of most of the monetary policy guys in those countries, including us, is how do I want to retain these guys? How do I want to reduce the outflow? So for them to reduce the outflow, it means that they need to raise the rates in their country so that it covers for that additional risk that they are taking.
Ayo, let me stop you there so we catch up. So you're saying, number one, that if rates go up, then shares suffer because people move money from shares to fixed income. Then you are saying that the cost of the interest rate risk for, or the cost for emerging nations like Nigeria, because the rates in the US are rising, then Nigeria has got to raise its rates. Nigeria and other frontier markets have to increase their rates to attract the dollars that would have flown to Nigeria, but it's now going to the US because US has raised rates. Just wanted to catch up so you can continue.
Okay, correct. Yes, correct. And thanks for that summary. So when we look at in terms of expectation, so that I'm trying to wrap up on the equities market, both globally and how it impacts on the Nigerian market, I believe that most African countries would want to raise their rates for those that are really exposed to the foreign guys, for them to be able to reduce their exposure, because the foreign portfolio investors provide the FX liquidity and reduces pressure on their central bank. But for us, because of the initial exit of most of the foreign investors, the CBN may not be too quick to raise the rates. But even if they have to raise the rates, when you look at the fixed income market currently in Nigeria, the treasury bills market has been segmented. So we have what we call the treasury bills, which it trades both in the primary market as well as the secondary market. And there's also what we call the open market operation, which is also a bill. So the treasury bills is used to raise funds to fund the budget, while the open market operation, which is also a bill, is only for the management of liquidity. So CBN, at their discretion, looking at the liquidity in the market, in the financial system, would issue treasury bills to mop it up if they see that liquidity is high.
Yeah.
So what we saw we've seen that CBN has segmented that market, that is only banks and foreign portfolio investors that can buy the OMO, that's the OMO treasury bills. So if CBN have to even increase interest rates, they would only increase the OMO rate. Yes, there's that effect it will have across the interest rate, but we believe currently the 364-day or the longer end of the longer maturity for the OMO is currently around 10.1%.
Okay.
And we know that the treasury bills 364-day, I think, closed at 5.39% at the last auction. So we can still see that there's that margin that we already see, and it's because the number of players that are accessible to the OMO market is limited compared to the treasury bills market. So that on the capital market. There's also something interesting that we may also want to look at is the crude oil price. We've seen how it has skyrocketed.
Oh yeah,
currently approaching the $100 per barrel level.
Yes,
and we know how dependent Nigeria is on revenue from crude oil. But unfortunately, if we look at how Nigeria is really not benefiting from this, because currently we are even unable to meet up with the quota. So there's what we call the OPEC Plus quota.
Mm-hmm.
The OPEC Plus is just the organization that of oil-producing nations that have come together for them to be able to regulate the market.
Yeah.
And but to control the price, they try to fix a level of production. We know how demand and supply affect prices. So to reduce the supply to the market, they try to reduce what each country would produce.
They're a cartel. They're a cartel, right? So they manipulate supply to keep prices higher.
Correct. Yeah, Yeah, so I think for Nigeria, our production level quota is about 1.6 or 1.7 million barrels per day for us to produce to supply to the market. But when you look at what we did even in December is about 1.2. So there's still a gap of about 400,000 barrels per day that we are not meeting. It means it's like a revenue shortage for us. There's an article that captured that we're losing about $32 million per day for that shortage.
Say that again, sir. Say that again, sir. How much?
We're losing about $32 million per day based on the shortage that we're the $400,000, 400,000 barrels per day of crude that we are not producing. So you would see that with government also projecting about 1.8 million barrels per day in the 2022 budget, you can see that yes, there's a serious problem. And one major thing that also happens or negative impact on Nigeria when crude oil prices goes up is that because oil prices or petrol prices are regulated, so it doesn't move with the prices. They are regulated by the government, and government has been subsidizing. So currently, with the higher oil prices, with the expected higher oil prices, it means that government is bleeding. And the way it has been structured currently is that it's taken from the sale proceeds of crude oil. So they've called it under recovery. But what it means is that before they share to the federal government and the state, they take out the subsidy element. So indirectly, we are paying for it. Indirectly, what goes to the state government is reduced on a monthly basis. And as a result, it reduces even the federal government's ability to implement the budget. So that's it's like a double whammy for us because the economy is not able to benefit. And when you also analyze that sector well, you discover that there's been significant increase in the usage, which you can also correlate with the number of cars. I won't want to go into that, but we're losing revenue from that angle. But we also want to look at it from the masses because of the trust deficit. Removing subsidy is also something on the table. And given that this year is also a pre-election year, despite the passage of the Petroleum Industry Act that eliminates subsidy, government does not have that boldness to take it out. I think we wasted the opportunity to take it out when crude oil price came to about $30.
Yeah,
so it
that was
been a gradual impact.
That was a big, that was Occupy Nigeria was one of the biggest mistakes in my lifetime in Nigeria. After Land Use Act and Federal Character Commission, Occupy Nigeria has got to be in that list. It was a big mistake. But Ayo, you've said a lot of stuff, right? Let me throw in some conspiracy theory for you. I saw a report from Financial Derivatives, and they were talking about how bunkering and oil theft is in excess of 200,000 barrels per day, right? 4 force majeurs in 4 months. So that means the oil companies are complaining about pipelines being broken and oil being stolen. And of course, the thinking is that this is because of elections. People want to fund elections, so we're going to have a lot of this breaking. And if I tie that to what you're talking about, that interest rates in the US are going up, so money is going to flow back to the US. We sell crude oil in dollars, but because we import PMS also in dollars, we don't take an advantage of that. And also that the crude oil in Nigeria is actually being stolen and not being sold to get that international forex coming in. So if you add all this in to a Nigerian listening today, what happens to if I have $1 million in my bank account? Is $1 million going to still be $1 million by next year?
Okay, thanks. I always like to make investors understand that you cannot afford to have idle funds because of the factor inflation. Inflation has to do with prices. So if I'm keeping my 1 million naira and it's earning nothing today, indirectly in the next 1 year, looking at the last inflation rate at 15.63%,
correct.
It means that I'll be losing about 150,000 indirectly. In terms, so it means the real value of that my 1 million is about 850,000.
Just sitting in the bank.
Just sitting in the bank. So if you always look at the other way around, it means that you will not be comfortable to always have your investment, your savings idle, not earning any return. So it's important that we always search for available investments, and this will now have to do with our investment objective, our risk appetite, as well as our knowledge about the different asset classes.
Yeah.
But my experience with a lot of investors is that sometimes if you, like we talked about treasury bills at 5.39%, and they calculate it for a year, they see that the interest rate is about 50,000. In their mind, they may prefer that it's not worth even investing in these treasury bills of getting 50,000. Forgetting that on doing nothing, you are losing 150,000. So what should always be in the mind of investor is, how do I want to bridge this gap? You may not be able to cover it because inflation rate is very high.
Yeah.
Depending on your risk appetite and the type of asset class that you are trying to put it. But if you are able to bridge, we said if you may lose 150,000 in real terms, but if you're able to cover it up with 50, it means it reduces your exposure. So what I will always advise any investor is, try to cover the gap, even if you can't meet up with covering inflation. And I know I will still speak about the various investments that you may want to look at. I don't know if I should.
No, we're going to get to that. I'm laying down this table, right? And let me just give you the numbers, right? I looked at all of 2021. All of 2021. You know, you posted those figures yourself. Inflation, the highest amount for inflation was about 18.12. That was in February and March. The highest interest rate on the safest investment in Nigeria, which is the federal government treasury bill, the 364 treasury bill, was about 9.75. This is the highest amount it ever went to. So between the safest investment in Nigeria and inflation in Nigeria, you are losing about 9%. That's a huge gap. 9%. And all through 2021, there was no period where the safest investment in Nigeria, which is a treasury bill, met inflation even at 2 or 3%. It's all 9, 7, 6. So when you say bridge the gap, this is a huge chasm to bridge. It's like an Atlantic Ocean to cross. Between keeping my money, I don't want to take risk. I don't want to buy crypto. I want to pay for my rent in 2 years. I take 1 million naira. I put it in the bank. I invest in government treasury bill, which is very, very safe. You are seeing that money is losing value just sitting there. And even if I bridge the gap by buying a treasury bill, I still lose money. This is a big problem, Ayo.
Yes, very correct. I think that's the sad reality. And if you are looking at it against the risk-free investment, which is about 5.4%. But, you know, a lot of investors keep idle funds. And that's...
What do you mean by idle funds? What is idle funds?
Idle funds is I just put like my 1 million in my savings account, which you earn almost zero. I think once you withdraw or you withdraw from it about 3 or 4 times, you don't earn any interest on that account. So it means that your funds are just idle and they are not earning anything. Especially if it's in a current account, you would even be charged based on the maintenance, different charges in the bank.
and all that, yeah.
Yes. So it means that the first step is to look at how do you want to close that gap.
Okay.
There's already a gap based on the reality.
Can
I close it based on inflation? There's already that gap that if I don't do anything in the next 1 year, this savings will lose significant value based on the rate at which prices of things are increasing.
Okay.
So how I need to look for ways of bridging the gap. So that is one thing that we need to take away. I need to look for a way
to bridge the gap. So they want to bridge the gap. Okay.
There's also that impact that exchange rate would also have on it, because most of the things that we also try to purchase are benchmarked based on the exchange rate. So to also bridge the gap, it means you may also want to consider some dollar investment, which we'll speak about later. Having your position in FX is already a way in Nigeria to also bridge that gap to a level because of the impact exchange rate have on prices.
Okay. Ayo, let me ask you, if I took that 1 million naira and I simply bought dollar, whatever exchange rate, I bought dollar at official rate, that's NAFEX, so 414. Let's say I bought that 414 and I simply kept that dollar in my pillow. I didn't, just in my pillow. So I've avoided the 15% inflation in Nigeria. Is that enough?
No, it's not enough, but you have just minimized it. So how you will make money is when there will be an adjustment. And when you look at the trend, I think I did a chart looking at from 2001, exchange rate was below 100 naira then. 100 naira to a dollar. So it means that if there's any adjustment in naira terms, you would always make money. So you are also able to hedge and you could cover inflation rate. For those that invested in dollars in early 2020, currently their portfolio should be up close to 40%. Without just buying dollars, you should be up close to 40% because of the exchange rate as at then. Now using the parallel market rate, and if you use the official market rate, it will be close to 25%. So there's also a way to buy dollars, keeping your money in dollars to also hedge, especially if you have dollar obligations like school fees, tourism. You need to have a bit of your investment in dollars to hedge against that rise in prices.
So if I'm spending in dollars, I have to hold dollars at least to hedge against that increase and to protect myself from the 15% fall.
Correct.
Okay, so we're moving closer, Ayo. So tell me how I can bridge that gap. We've said we shouldn't hold, dollar is not enough. If I have 1 million and I'm in 2022 and US rates are going up, let's talk about the Nigerian stock market before we get there. I was surprised. I asked people a poll. I did a poll and I asked people, which stock market do you think performed the best in January 2022? So I asked them, I said the US market, I said the Johannesburg market, South Africa, the Ghanaian Stock Exchange, and of course, Nigeria. So out of the US, that's the Standard & Poor's, or Ghana, or South Africa, and Nigeria, which stock market do we think performed the best in 2022 January? You know the answer, sir. The answer is Nigeria. Nigeria's stock market, returned about 9.15. The S&P was negative 5.88. Johannesburg was about 1.86. Ghana was negative 1. So the Nigerian stock market in January 2022 was the best performer. It beat the US, it beat South Africa, it beats Ghana. So is the stock market a place I should look at if I have 1 million and I want to bridge that huge gap identified because of inflation and all that?
Okay, thanks. And it's good that I would say it gives us positive outlook for us to close as the best performing market in the month of January. But as an analyst, it's also good to do a further breakdown. What is responsible? Does this cut across the entire or majority of the stocks, or there are just few stocks that are responsible for it? So we can say there's what we call market breadth that looks at the total number of gainers as a proportion of the total number of users. Yes, about 59 stocks gained and about 28 stocks lost, while I think about 48 remain unchanged within the month of January. And some of the major stocks that really pulled the index up were Airtel Africa, that recently joined the FTSE, that's the Financial Times Stock Exchange 100. You have Seplat, so Airtel Africa gained 33%. You have Seplat that gained about 22%, and Eternal Oil gained about 19%. So if you look at the impact these stocks will have on I think you can also look at MTN on the index. It will be significant. But in terms of activities, you would notice that banking stocks that account for close to between now 40 to 50% of activities did not really perform well, save for Ecobank Transnational that gained about 44% and Sterling Bank that gained about 15%, which can be traced to their interesting performance. Ecobank recorded about 324% year-on-year growth in their PAT, and I think Sterling too was positive, I think about 10 or 15%. But by and large, I would say that yes, there's opportunity in the local market, but our market is really not as deep as the developed market. So if you are going to invest, to take a pessimistic view, you look at stocks that have high dividend yield. So what do I mean by high dividend yield? Stocks that when you compare the dividend that you'll be paid relative to the price you are buying, is going to give you good return. So for instance, you pick Zenith Bank, for instance, and you look at the total dividend they will pay. Let's say, I think based on last year, about 3 Naira. And you look at it as the proportion of this current share price, maybe giving you about 10 to 12%. So that in itself, if you are locking in funds for a long term in Zenith, you can be guaranteed that you'll be having about 11 and 12% dividend return, which excludes the capital appreciation that you may still get. But when you invest in shares, it can be up or down. But if you have that long-term perspective, even if it's down, your cost remains the same, and dividend will be paid you based on when dividend is paid, you compare it to the cost that you have purchased. So you may be guaranteed return. So I would say that yes, there are opportunities in the equities market, but given that this is a pre-election year, we expect that there will be a lot of volatility. So what I would recommend for investor is you come in tranches, so that you have cash when things are really down, and you can take advantage of the market. We feel that things will further stabilize more in 2024 when we know the new president and we also have a bit of clarity. So in summary is that the equities market, yes, presents opportunity, and it should be viewed as a long-term opportunity. And if you are trying to invest, you look out for stocks that will give you good dividend return.
Let's drill down, Ayo. Let's drill down. BUA Foods came in like a rock into the market. It came in. I think it had displaced Nestle as the largest cap in that sector, in that food sector. Was the market return because of BUA Foods and all that? Was it like an outlier? Is that what I hear you saying?
Yes, I feel that the market return was more of the large cap stocks driving it. So
okay.
When we talk about normalization, if I was going to do proper analysis, I may want to take out those top 3 or top 4 stocks and see actually what market is returning.
I think you have a point. So in 2020 as well, the Nigerian stock market was the best performer in the entire world for the year 2020. But when you drill down, that return was based solely on Dangote Cement when they announced the buyback. So that basically moved the entire index and Nigeria became the best performer in 2020. So it's good to peel the onion and look at the numbers. That's what I hear you say. I also want to emphasize that.
It's good.
Yeah. I also want to emphasize the point you're making about the dividend yield. That's what I do personally. I ask people when I want to invest, what I do, sir, is I look at the yields, first of all, on the treasury bill rate. If I get a treasury bill rate of 5%, that becomes my hurdle rate. That means I have to beat 5%. Then I go to the market and I look at the dividend, the stocks. And when I want to buy a stock, I always look at that dividend yield. And you talked about Zenith. Zenith is one of my favorite stocks. They pay a ton load of dividends. So they have a very, very high dividend yield. So I use that, just like you've said, to get that return to compensate me for keeping that money. So we don't want to really mention stocks per se, but if I had ₦1 million, like you said, okay, now don't keep it in Naira because of the 15% more or less. So have a diversification, buy some stocks. And I hear you saying, look for stocks that are going to have a dividend yield. Should it that at least beat or match or bridge the gap with inflation? Is that the strategy for us now in 2022 and going forward?
Yes, I think it should be one of the major strategies for those that are not really savvy about the market. So you can go and rest. So you are not trading, you are investing. So you are putting your stocks in value stock. So I was trying to craft if I was going to craft a portfolio, what portion will I put out of the 1 million? Will I advise that you put in Nigerian stocks?
Please go ahead.
It will be between 10 and 15%. So the portfolio that I would propose, this would it's not like a general rule of the thumb and
educational. This is educational. You are not asking people to buy or invest. You are simply saying if you had to invest yourself, this is what you would do. It's not you're not giving financial advice. Go ahead, sir.
Correct. So I would put like 20% in a dollar mutual fund. So beyond buying dollars, you can put the fund in a dollar mutual fund. Dollar mutual fund is a collective investment scheme that invests in dollar assets, which includes euro bonds. That those are debt instruments issued either by the government, issued in foreign denomination by the government, as well as corporates issue it in foreign denomination. So, and for mutual funds, why did I mention mutual fund? The barrier level is low. For most of the funds, minimum is about $1,000. There are some that have $100 that entry level of $100, and you can always top up. So it gives you the opportunity to build an investment in dollars. Minimum investment for Eurobond is about $200,000. Some may take about $50,000. So you can see that barrier is high. But for you to invest, for mutual funds, they are regulated by the Securities and Exchange Commission.
Mm-hmm.
And before you invest in mutual fund, you can go to the SEC website and confirm if that company is registered with the Securities and Exchange Commission. And mutual funds have custodian who serves like the middleman. So it protects you. So even if the firm you are investing through goes under, the custodian and the SEC will move that fund to another asset manager. So the risk is limited. It's only that the return is not guaranteed.
Mm.
So what I would always advise is always monitor the return that you get. If you are looking at long term, on a yearly basis, look at what they are giving to you compared to what other funds are also returning, and they ask questions. So you can switch if you feel that you are not getting value based on the investment. You don't wait until 10 years or 15 years that you discover that you are really not getting value.
So secondly, I'm taking notes, Ayo. So you say 20% in a dollar mutual fund.
Mutual fund, yes.
Okay.
Then I would recommend another 20% in foreign stocks.
Okay.
And foreign stocks would be those that have value. You can mix it between 60% of those that have value stocks, and also high growth stocks. So you know that if you look at a 5-year chart of a stock like Apple, so I'm using it for just example opposite for Apple, you would see that on a year-on-year basis, they have continued to grow. And that presents opportunity. Stock like Microsoft, though they will not give you the 100% at once, but you would see that steady growth. You may also want to look at those high growth stocks. So you know that there's a lot of opportunity now within the electric EV space. And beyond those producing the cars, also charging points. Still, all those are also working on charging stations. There's opportunity for them. And with what we've seen with the impact of Fed, most of those stocks have suffered significantly. This is the time to buy in bits so that in the next 2-3 years, you may be able to get as much as even 50 to 100% in those stocks if you're a long-term player. So I would recommend 20% in equities. And if you don't want to select stocks, you can look at ETFs. That's exchange traded fund. Mm-hmm. These are just a fund that tracks different stocks within a sector or top stocks within a particular market. So they do the investment for you, and you can decide to look at that. Then I would also invest about 40% in fixed income.
Fixed income.
Fixed income is for in Nigeria, not abroad now. So you would see that I've allocated about 40% to foreign investments out of the 100. 20 for dollar mutual fund, which is a fixed income, that's capital preservation. For foreign equities, it has a bit of risk, but it can also give you higher return. For fixed income, you can either invest in mutual funds or you go into treasury bills yourself. I'm using the amount. Some firms accept as low as 100,000 naira for treasury bills. So which gives you can lock it in. Interest rate may not be interesting, but you can, at least you are preserving your capital. That's about 40%. You can also look at mutual funds. So there are two types of mutual funds. There's the one we call the money market mutual fund. They invest in short-term securities like treasury bills, commercial paper. But there's also the one we call bond or fixed income fund. They invest in bonds. And in fixed income, the longer the duration, most times, when you have a normal curve, the higher the interest rate. So for most bond funds, will give you higher return. So but in terms of what we call lock-in period is the period when you invest in mutual fund and you can't, if you take out the fund, not that you can't take it out, there will be a penalty.
Yeah.
So most money market funds would have lock-in period of 30 days to 60 days.
Yeah.
And for bond fund will have between 60 to about 90 days. Some may have 180 days. So you need to always ask questions. So you don't put short-term funds into those funds so that there's no penalty. So if I were the one, I would invest more in the bond mutual fund because I'm looking at a bit of long term. So I enjoy higher interest rates. They use the money to buy bonds.
How long is this portfolio for Ayo? Don't let me interrupt you. Is it a 1 year portfolio? How long is this portfolio for sample?
So I'm looking at a 2 to 3 years portfolio.
2 to 3 year portfolio, okay?
Yes. Yeah, so you're able to enjoy that high return. Then lastly, I've spoken about the Nigerian stocks, which is about 10% because of sometimes the volatility that you see, but dividend paying stocks, you would also be able to have better return.
Okay.
So that will give you about that's about 100.
That's about 90.
That's about 90%. Okay, so I missed. So I would say 45% in fixed income, then 15% in Nigerian stocks.
Okay, got you. Because I'm tweeting that out right away for those that want to follow. I'm going to tweet out Ayo sample portfolio and all that. So 20% in the bond fund because you want to avoid the quote-unquote volatility and the loss of purchasing power of the naira. You've got 20% in foreign stocks, growth.
No, not a bond fund, a dollar fund.
A dollar, yeah, sorry. 20% in a dollar mutual fund, 20% in foreign stocks, value and growth, and ETFs. You like ETFs? I love ETFs as well. I think the only product I ever recommended people to buy is the VTI ETF, which buys the US market because that market is just on fire. Then you've done 45% fixed income in Naira. You recommended money market and a bond fund, and of course 15% in Nigerian stocks. That is your sample portfolio for Nigerian.
On the fixed income, I also added treasury bills. So depending if you want to go as invest directly, treasury bills, or you invest in mutual funds.
I tend to like the investing in the funds because of the ease of liquidity. If you have the treasury bill, you have to go. But if it's a mutual fund and you bought it through like a bank, you can always go there and sell just 1 unit or 2 units. So it gives you a bit more flexibility and all. Yeah. So I've taken this down and I've just tweeted it out, Ayo. And I said it's a sample educational portfolio, just sample. So I've tweeted that out, Ayo. But let's go deeper into this, right? What about property?
Okay, thanks. Property involves higher capital, so we're talking about 1 million portfolio here. And also, you need to also take into consideration that it's high risk and liquidity is also not there. So it's meant for those that have huge funds and also have that time to do due diligence. Yes, we have what we call REITs, the real investment trust fund that you want to invest in. But when you check in the past few years, we've not really seen very interesting performance from those REITs.
Yeah. So
it may be like I may take that to be a very risky investment.
Interesting.
And so I won't recommend, if you have to go into it, those that have the capital. One, you need to do your due diligence on the developer. You need to engage your lawyer. And what I always advise people is spend a bit of money, which is like I would call it like the insurance, to do your background check before you even invest in real estate. There's opportunity there. As you invest, you can get 20, 30, 40%, depending on the area where you're buying the land and you're building the house.
Yeah.
But one of the major risks is the integrity of the developer, so that there's no cost overrun, there's no time overrun, and you can at least the project can be delivered to you. And if you hit for retail investors, you may not have that time, or you may not even have that capital to be able to engage someone to do that background check for you.
Yeah.
I think lastly, I will mention on real estate, always see what you are buying. Don't let people sell to you based on what you can see online. There are a lot of issues going on in Nigeria that there are some areas that development will not get to in the next 20 years. Some people have paid for it based on the diagram they've seen online. So you need to get and visit or send someone to visit on your behalf before you make payments.
Yeah.
Don't buy property, don't buy land based on
But Ayo, this is a guy that has just $1 million naira. So what if you wanted to buy property abroad? You mentioned something about REITs. I don't know why REITs in Nigeria have not done well. I don't know why. I don't know if you have a reason why. Because a REIT, for people that don't understand, a REIT is a company that buys properties and then it pays you that property, the rentals, as dividend. And you're supposed to get as high as 90% of the rentals is paid out as dividends. The companies that do REITs in Nigeria, is it that they're not buying the right houses, or that folks are not paying the rent? Why has REITs not really, big? To me, it should look like an investment that checks all the buttons. It's safe, it pays you a dividend, and you can buy your property in Ikoyi with 100 naira. So why are REITs not doing that well in Nigeria, Ayo?
Okay, thanks. Very valid question. And personally, what I would think is, I would say bad management. Because like what you have put there, it looks so straightforward. If individual can buy land, or can buy property and sell, they have the higher capital to be able to buy. I feel one or two firms, like where the company I currently work for, are also structuring something around the REIT space, which I believe that in the future will be able to yield more yield steady return. So getting properties that will give you stable rentals. So I feel I would say for those that we've seen that have not really yielded significant results, I feel that it's more of management, because sometimes you see them make serious provisions, and they also, maybe the ambition may be bigger than the ability of the management, that you go into a project, white elephant project, that you're unable to complete, and it's not yielding return for you. So I believe that there needs to be a rejig of how that should be done. And I feel asset management firms can also take that as a challenge to develop products around that and work with trusted developers, build low-cost houses that is affordable for the medium, low to mid-level income earners.
True.
You'll be able to turn it around. You buy, you build within 1-2 years, and you sell and you move on.
True.
That margin sometimes for people, customers that I speak with or clients that have engaged, they can get close to 50% in 2 years, some even close to 60%. So you are asking the right questions regarding why we are not getting much value from REITs, because that's the best way where retail investors will be able to put in their funds, and they will be able to get a return that is commensurate with the risk involved in that space.
Let me add some more data. I follow a guy, he's in the US, right? So he publishes every month. He publishes a total return of really all asset classes in the world, right? So he publishes in 1 month, 1 year, 3 years, 5 years. So for 5 years now, 5 years return now, the product that has the highest return in 5 years in the entire world are US stocks. And he's quoting the VTI. The VTI is an ETF. So for over 5 years, the VTI has returned 16%. That's globally for the last 5 years, 16.1%, right? The next investment that has returned the highest return in the whole world globally is US REITs, US Real Estate Investment Trust. So US property. If you bought a US property, you are going to get about 9.5%. Let me look for foreign bonds, 2%. That's Nigeria, all that kind of stuff, just 2%. Foreign stock markets, developed stock markets, 8.5%. So that's also capturing what we're talking about in Nigeria. So if we go back to this idea of stocks and inflation, I tell people, if you are young, you should be invested in stocks, because stocks over time tend to beat inflation. Fixed income, not so much. Okay, what stocks? Buy an index, buy an ETF. What market? Buy the US. If you look at the map of the US stock market growth, it's just up. You see up and down, up and down, up and down, but the trend line is going up. And technology has made it possible that I can sit in Taraba and buy Tesla on my phone. It's amazing that you can actually sit in Nigeria and invest in Tesla. So I want people to understand that we're in a global village. You shouldn't wait. IO has given us a portfolio right now, but don't wait and be like, when I get ₦1 million, I would invest. Get in now, and try to make this returns, IO. I don't want to add anything on this. I'm going to tweet this right now on my Twitter feed right now, so you can see what I'm talking about, the total returns globally for these asset classes. So it's on Twitter. If you have a question, you can ask. And also now, if you want to ask Ayo a question, please either request to speak or send me a DM and I will let you in. So Ayo, someone says REIT spends more on recurrent expenditures that like salaries and emoluments than dividends. Ayo, this guy is saying that REITs are really spending the money they get from dividends on salaries and operating expenses and not dividends. In the US, the law is that they have to pay out 90% of rentals as dividends. We don't have that law in Nigeria.
No, I don't think we have that law in Nigeria that mandates. So it's based on the return that you get. So there's a cap to what you can charge. There's a cap. I can't recall the maximum charges on rates. I know surviving with that. So if you are setting a target, savings target of 10% for yourself, it's not too much. You'll be able to survive. And if you don't cultivate that culture, from when you are earning 100,000 naira down to say 10,000, when you start earning 1 million, you will not be able to save 100,000 because your expenses will quickly catch up with that your new income. And at the end of the day, there will be nothing that you will have. Setting up an emergency fund is really key.
Very important. I think that should be the first thing that you do really when you want to invest is to first of all have that emergency fund so that if anything happens to you in Nigeria, we have no quote unquote health insurance and all that. You're able to dip into the investment fund and not dip into your investments and break like your investment and then pay that fine. So very important that the first thing you do before you even start to invest is you have that emergency fund set up. Guys, sorry, I can't add anybody. I think it's Twitter again. So please send me a DM and I will make sure I read it out and so Ayo can take a glance at it. Ayo, somebody's asking me to explain how you can buy US stocks from Nigeria. So there are lots of apps in Nigeria. You can either buy US stocks, I think mostly from the apps. Some are SEC registered, some are not, some are just US apps per se.
Are also US-based firms that allows Nigerians to also open accounts. So it's not all the US firms that allow Nigerians to open. They will request for your security number. But there are some that are really, they've tried to domesticate it and give you that access to Nigeria. And you can also look out for them. I don't know if I will just mention do your due diligence so that you do your review and before you take action. So like Carl was mentioned, you have in Nigeria, you have the Chaka, you have the True, you have the Bamboo. I think Chaka has been licensed by SEC. The other two currently not licensed, but I know that they're also working on that. Then you also have Fastfolio, the US firm, and they're in over 170 countries, if I'm correct, or 17 countries. Yeah. And they try to also localize that. There's the Choice Trade also accept Nigerians. There's Trade Zero also accept Nigerians. But if you are abroad and you have security number, you want to look at trade 212, trade 212, and there's other several ones that will be open to you. Most of them may not even be charging. There is no transaction charges compared to what you have in Nigeria. So there are a lot of opportunities, and there's what we call fractionalization. So it means how to mention you're buying Tesla. So even if I want to buy $50 worth of Tesla shares, I can buy it. That means I can buy like 0.1% of Tesla shares, which gives me access to also own Tesla shares. If they pay dividend, like Apple just paid that dividend, it will be split based on the proportion that you own, and it will be credited to your account. So there is really no limitation to buying foreign stocks. You can start with $100 and you invest in 5 stocks that you believe in, or you also go for the ETF. I think Fastfolio too has that ETF. So try to do your due diligence background on all these companies that have been mentioned and take your own decision on which one you want to go for.
Yeah, I think I have another good way to say, I think the US companies, if you are in the UK, try to get a UK app. If you're in the US, try to use a US app. If you are in Nigeria and you want to buy UK stocks, try to use a UK stock, a UK app like the 212. The reason is this: if you want to buy some mutual funds that are issued in the US, you will not find them on the UK apps. They have this thing about taxes and laws. So VTI, for instance, is an ETF that tracks the US market. If you look on most UK apps, you might not find VTI there. So if you're living in the UK, get a UK app and go through there. If you're in the US, then get a US app. So like there's Robinhood, but you need to have a social security number to use Robinhood. It's free and it's very, very good. Very, very good. But Nigeria, like Ayo said, there's Chaka, there's Bamboo, there's Rise, there's Cowrie Wise as well. These are all local apps that you can use. Trove, you can use to basically register and you can buy. But do your due diligence. On my website, I do have the links there that you can go on and click, and then if you like them, you can invest. Passfolio is US, but they allow Nigerians to trade, so those are pretty good as well, right? So someone is asking, Ayo, is it advisable to invest in private equity firms? I think my answer is this: if you have ₦1 million and you're investing for 24 months, I would not go to private equity because that has a longer gestation period, but it also has a high risk because private equity, you are investing in profit and loss of an idea. The idea could be profitable and you make a lot of money, or the idea could fail and you lose a lot of money. Ayo, do you have anything you want to add to that, sir?
No, I think it's well said. And just the little I would add to it is that based on the available funds, you need to first understand that private equity is like they take a lot of risk.
Yeah.
So if you are going into, most of the time they fund even greenfield, they fund ideas compared to the bank. So it's really high risk, except based on your risk appetite. Going into that, you must be ready to, maybe you want to put what you may be comfortable to lose if it happens, and also it's long term.
Yeah.
You need to also have that understanding that there's always a waiting period. I know there are apps that I think Get Equity, the different apps that also try to give you access to
private equity
to invest private equity. So
I use one. I use one. It's called Seed Invest. I log in and they give you lots of offers online, and you have to read it. It's at your own risk. So you look at it. If you think there are some that want to invest in plants, and there's one that has rice that has vitamin A, stuff, lots of stuff that you see there, vitamin C, enhanced sweets. You see games. You see this. You put in money. You can make it. You can lose it, but it's like I said, it's high risk.
Yeah, exactly. So now we always borrowing from Warren Buffett, that also always understand what you invest
before you invest.
So you need to do. Yes, you need to always do a bit of background check or a bit of reading, whatever new area you're trying to invest in.
Yeah.
Investment requires time, so it's good to you dedicate time to it, understand the business before you go ahead. And if you see that it's high risk, you can. What I would advise is put what you feel you can lose. That if you lose, it will not set you back or drag you back significantly.
Okay, I have a good question for you here. This is from Maneseti. He's asking, what is the ideal compound interest to invest in Nigeria over a 15 to 25 year period? I think he's saying that if he has 15 to 25 years to invest and he wants to compound his interest, he's asking where should he invest? I'll let you go first, sir, and I'll chip in as well.
Okay, thanks. I think what I recommend is a mutual fund because it gives you the ability to top up and to set a periodic investment for yourself. But the caveat is you need to monitor. So compounding is you are trying to earn interest on your interest. So when you are trying to set like a target for your fancy, if you want to set it to have 10 million in the next, you only need at the rate of 5%. It means that you are not taking out that interest. That interest is also being added and compounded, and is also earning return. If you set a target of 10 million for yourself in 30 years, what you only need to be contributing monthly is about 12,400 naira. And if you look at, if it's 100 million target you're setting for yourself for 30 years, you only need to contribute 124,000 naira on a monthly basis. And if at the rate of 5%, that's annualized, that every year rolling over that your interest. So what I would recommend mostly is fixed income. it is not susceptible to fluctuations. And if you feel that you are the type that also have a bit of, you can take a bit of more risk, you can also you can mirror that we've said. So, for instance, for stocks, when you receive dividend, try to reinvest the dividend to buy additional stock. So before you know it, you are already building your capital. Over time, you are compounding, and you'll be able to grow your portfolio faster.
So, Morris, I hear you saying start early, but you should also be in fixed income, and you should reinvest the coupons that you receive. Is that it?
Yes, correct. And if you have to go to equities, reinvest the dividend that is paid to you.
So start early and then, of course, reinvest the dividends. Got you. So like I said, 20, 25 years is long term. I'm not sure of his age, but I would also always advise have something in equities for that long period of time. But he's saying Nigeria. So still, I would say have something in equities, because also last year, equities still beat inflation in Nigeria. Even last year when we had 18% return, equities beat inflation. Fixed income did not beat inflation. But if you're doing fixed income, like Ayo has said, reinvest your fixed income so that you are compounding. That's how you are compounding. There is no quote unquote compounded investment. Compounding is a verb. You have to reinvest the dividends to compound. Just to make that point clear. Is there any company that has an app? This is Ayola asking. Is there any company that has an app for those in diaspora to use to buy equities? Yes, Ayola, we just listed them. We said if you have a social security number, it's easier for you because you can literally register on most of these apps. If you don't have a social security number, then you want to use a Nigerian-based app like Trove, like Bamboo, like Chaka, like Cowrywise, like Reasinvest. They'll all have Nigerian KYC. They will know their customers here using Nigerian issued identification, and they're able to do that for you. If you live in the UK, I've advised, if you're in the UK, use a UK app like a 212. If you're in the US, use the US app, because when you buy across those jurisdictions, some securities do not show up exactly how they are. If you go to, for instance, Passfolio, and you try to buy VTI, which is a US registered equity trust exchange traded fund, you won't see it in Passfolio UK, but you'll see it in Passfolio US. So just try to keep that in your contemplation. And I'll try to put up a list, and I'll try to put up links for you guys in case you want to buy. So it's also asking, I raised a question from Olaro to me. He's asking, also, which US stocks would we recommend? Yes, and it will be recorded. Ayo, I'm recording right now. Spaces will record it, and also podcast will have a recording, and it will be there after the session. Ayo, do you want to take a stab at recommending, say, 2 or 3 stocks? I'm assuming, maybe Ayo is a 30-year-old gentleman and he wants to invest in US stocks. Would you go for the individual stocks directly, or would you go for an ETF?
For me, I would prefer to go for the individual stock, maybe because of a bit of the knowledge that I have. So going for the ETF, if you feel you may not have much time to monitor or much time to understand the market, it's better to go for the ETF. They track the best, like you have the ETF 500 that tracks the best 500 top 500 companies in the US, or tracks a sector of financial services. So I would, but if it's personal, I would go for the individual stock. So for instance, we're expecting that the Fed would increase rates. Who are those that will benefit more? They are the banks. So if I was going to invest today, I will be investing more in the banks, taking advantage of that, the likes of JP Morgan, Bank of America, Morgan Stanley, and you are taking position in them because of the expected increase in interest rates, which will increase their interest income. I also spoke earlier about electric vehicles. We know the demand has continued to increase. The likes of Tesla, the likes of Lucid, NIO, it's a Chinese EV vehicle, and they're also doing competing favorably, and because of the volatility in the market, most of those stocks have dipped by close to 50 to 60%. So, if for me as a long-term investor, I'll be taking a bit of position in that. Then you also have the charging stations, that's charging points. You have Volta. I'll be taking a bit of position in them because there will be, as EV vehicles increase, there will be need to build new charging stations, and that will also increase their revenue. There's also this new technology that most of us are talking about, metaverse. So those stocks that are exposed, Roblox, Nvidia, if I'm not mixing the name.
Nvidia, yeah, you're good.
Yes, yeah. So you also want to look at them because of their long-term prospects that they have. So it's good to look at those individual stocks. They have the potential to give you higher return. And diversification is also very key. When you are investing, don't take all your $100 and just invest in one stock. I would recommend a minimum of 5 stocks just to diversify. In case you get it wrong in 1 or 2, the other 3 may give you a return that would supersede and cover up for the other 2. So diversification is also important that we need to always take note of when we're investing. But by and large, if you don't have the time, you can't monitor, just play safe and go for ETFs.
I am going to ask you to name those stocks if you don't mind. I'm getting lots of DMs. So I heard you say Tesla.
Okay. You mentioned Tesla,
yeah.
Apple. I spoke about
you said banks. NIO? Okay. That's the electric company.
NIO, the electric NIO,
Lucid. Yep.
Then the banks, Bank of America. Morgan Stanley. JP Morgan. You pick any of them. Then the charging stations. There's what we call charging points. They control about 30 to 40% of charging stations in the US.
Okay.
You also want to look at Volta. They're also doing well, or EVgo. Those are charging stations. Then, if we're looking at those within the metaverse area, for those that have that long-term perspective, Facebook now is presenting an opportunity. I believe that there's been a bit of overreaction.
Yeah.
It may still go down, so you may, when you feel that you are not so certain about the direction of your stock, if your intention is to invest $50, for instance, you can first take a bet with $30 in case the direction switches. You are at least locked in, and if it goes down, you dollar average cost with the balance. So I think Facebook is something that would present. Yes, there's a lot of competition, but with what has happened in the last 1 or 2 last week, I believe it also presents opportunities. Then talking about the metaverse stock, Roblox, Nvidia Corporation, they are also good. You also want to look at Unity Software. Those that are or AMD, and their result was very advanced micro devices. Their result was really very significant. And for those that maybe a bit don't want to take a lot of risk regarding crypto, there are stocks that track crypto. You have, for instance, what we call the Marathon Digital Holdings, which is MARA. The short is MARA. You have the Riot. They also buy Bitcoin, so their performance track what is happening to Bitcoin. And you also have what we call Bit Digital, BTBT. And on Friday,
BTBT.
BT, yes. So you may not want to trade crypto directly, but because they invest in crypto, you can take advantage when crypto is down that you buy. And there's something that I would like to just emphasize. In the market, if you are buying, always buy when stocks are red. Don't, when they are green, always just wait for the opportunity. Don't try to chase the market. Always try to position yourself on days when you feel that there's a bit of overreaction. At least you have minimized your downside. And you may also want to be checking a bit of technicals, and to see whether stocks have been overflogged, the relative strength index. These are indicators you also want to check. You check it against the 12 or 52-week low, 52-week high.
Yeah.
It can also help you to know if you are buying at the highest for the last 52 weeks. You know you're taking a bit of risk. So if you still believe in it, maybe you want to just take a bite of the pie and not invest significantly and still wait for an opportunity when it would come down.
So you're saying basically when you're trying to buy when the market is falling, not when the market is rising, because when the market is falling, you are getting those discounted prices that pay good dividends. You are chasing like a dog of the Dow, more or less. You're buying when people are selling. So you are going opposite, more or less. And number two, you're also saying, do your due diligence. And I think you should add the expense ratio. Most of these funds have what's called an expense ratio. And make sure someone just reminded us that if you talk about the expense ratio, they will charge you a fee sometimes. Always make sure that the expense ratio is not too high and you are basically getting that stock and not paying too much in terms of fees. Very important. Someone asked the question, I think it's also important. He says his PFA return, his RSC on this retirement savings account return is about 5%. That's what he's asking. And that's the overall national performance for retirement savings accounts. So he's asking, what should he do?
Okay, thanks. We're all in this together for everyone working in Nigeria. And what will always be advised is you can set up your own pension fund, like what we're saying. You are saving on your own, paid for whatever return that you may not get, the shortfall that you are getting in the one controlled by, or you don't have control over.
Yeah.
So if they're currently taking 7.5% from your own and the company is adding a 10%.
Yeah.
On your own, you may also want to do what we call voluntary contribution. You may not want to give it to a PFA, but you set that on your own and you control. That's having your destiny in your hands. You control that yourself. You can set 10%, 15% of your monthly income, and you are putting it into the various investment options. And that may also help you to cover up for that gap. This is the current pension is controlled or is really regulated. And yes, I may have a bit some reservations around the rigidity around the regulations, but we also know because of a lot of volatilities, things that have happened in the past, they are after capital preservation because they don't want to tell you stories when you retire that your company and you contributed 20 million, but your 20 million is now 5 million because of risk taking. Yeah, so I believe that you can create or craft your own portfolio for yourself and build your own pension, which is part of what I know I've informed what Carl is talking about, investing, saving. So you are building your own retirement plan for yourself.
So what I hear you saying is that do the mandatory pension, but you can also start your own quote unquote pension fund and start to save and just to invest more, because the asset allocation of the PFAs is very, very rigid in how they can invest, So, but if you're able to do your own investing, you can try to at least bridge that contribution and returns gap. I think it's good advice. And I'm putting up a Twitter put up a Twitter trend on most of the apps and all that. Somebody's asking what's investment house. I don't want to mention names really on the Twitter space if you guys don't mind, but we'll try to give you the apps that you can basically use to buy. But I don't know too much if we should mention names. But if you look at it, there's a trend there that has most of what Ayo has talked about, the allocation. And I put on the Trove, I put on the Acorns. I'll try to put as much as I can find on that trend for you guys, right? And he's pulling up, Ayo. The guy is pulling up. Okay, I'll go to the next question. Don't worry, because that's going to be a bit more. Toby is asking, do ETFs pay dividend? Yes, I can answer that real quick. ETFs pay, it depends on what the ETF is buying. You must read the prospectus. Some ETFs pay dividends, like the VTI, VOO, even Nigerian dividend ETFs or mutual funds, some of them pay a return, some do not pay. Like Cathy Woods will not pay you because she's investing in high growth. So if you're investing in a growth company, you are saying the company is going to grow fast and you want them to reinvest their dividends to grow the company. But if you're investing in a value company, the company is quote unquote already mature. So you are saying, yes, they can then pay me some of that return that they have gotten. So make sure you do your due diligence and find out if they pay dividends or don't. This guy is asking, I won't mention the app, but he says he put money in an app since December and he was paid 8,500. So he more or less he put in $1 million in December, and in January he was paid 8,500. That's about a return, I believe, of 0.08 or so. Should he take his app money somewhere else? I think the question I'll ask is this: if I do fixed income investing, what is the minimum return I should get? So if I do fixed income, can you give me a number that I should say if I'm investing for a year, this should be my minimum? If I don't get that minimum, I walk away. Do you have a number for us, sir?
Okay, thanks. I think on top of my head, or if I'm going to personally, what I will be benchmarking you against is the risk-free investment, because
correct.
I would say that if I'm not taking any risk at all, I'm not giving you, I'm the one going myself, not taking any risk, I should be able to get 5.39%. So now for managing my funds, and I believe you are more experienced, you should be able to take advantage of more opportunities. You are pulling funds together, which also gives you opportunity to invest in commercial paper that have higher funds. Then you shouldn't give me a return anything below treasury bills investments. So it's good to have that benchmark. And I always emphasize, always monitor the return on your mutual fund. The return is not guaranteed on mutual funds. So you need to monitor it. We've spoken about compounding, setting a 30-year goal. Don't wait until 15 years, 20 years before you discover that it's only your capital that you have preserved. You must be able to always ask them question, what's the return for that year? Compare it with the return on other funds. So after maybe 1-2 years, you have been comparing the return and you feel it's been lagging behind others in the firm. You may want to either switch or reduce your exposure to that particular fund manager, because it's an open market and it's good that you also get the best. It's money you have worked for.
Yeah.
Don't just put the money in, because sometimes when you're discussing with clients, it's, I just have that fund. I don't even know the name of that house. So you just imagine they work hard for the money they have invested, but they are not tracking.
Yeah.
You need to track your investment. You need to know how it's faring, and you need to ask questions.
So Ayo, what I hear, just to summarize to people, if you invest in any app or bank or whatever, your benchmark is the risk-free rate for the period you are investing. So if you are investing for 1 year, you are benchmarking against the federal government of Nigeria 1-year paper. If you're investing for 3 months, it's against a treasury bill. If you're investing for 5 years, it's against a 5-year government bond. The reason is because the federal government bonds are quote unquote risk-free. So for you to invest somewhere else with risk, you want to have a higher return. So benchmark to the federal government. If they're not paying you more than the federal government, then you should not be in that investment. You should at least be with the federal government. I know somebody is asking, what ETF can a Nigerian living abroad invest in Nigeria? I can give them that. So the ETF I know that invests in Nigeria is called NGE. The actual full name is I think it's the Global X MSCI. But if you type in NGE, that's the code. That's the Global X MSCI Nigeria ETF. When you buy that ETF, you are exposed to Nigerian companies. Let me give you their top 10 companies that they buy. Guarantee Trust Bank, Nestle, Zenith, First Bank, MTN, EcoBank, Lafarge. Then they have Access Bank. So if you want to buy MTN or you want to buy Zenith Bank and you live abroad and you don't want to basically buy via a Nigerian broker, you can buy the NGE, that's the ETF, and it gives you access to the top 10 Nigerian listed companies. So that's a way for you, an ETF, to invest in Nigeria. Ayo, this guy is also asking, right? He wants to earn that. He says an app is offering him 10.5% per annum for 5 years. And he's had no issue with the rate, but he's asking, because of inflation in Nigeria, this is Farouk asking, should he invest to get 10.5% for 5 years if inflation, with inflation in Nigeria? He's asking, what's your take on that? Please, Farouk.
Okay, thanks. I think what I would want to also confirm is, are you locking in for 5 years? If you are going to lock in for 5 years, I think that is not commensurate with the tenor, the duration or the risk we are taking in terms of tenor.
Mm-hmm.
So what I would advise is that you should agree on an annual basis, because if you lock in for 5 years and interest rate moves to I think in 2016, 2017, 2016, interest rate on treasury bills was around 18%. You're able to benefit. So if you're not buying a bond directly that has longer maturity, locking in your funds for 5 years, I feel you may miss out of opportunities because 10.5%, yes, may look interesting, but I believe that it's not impossible to have interest rates go beyond that level within the 5 years.
Yeah.
So you don't want to shortchange yourself because you won't be able to have access to your fund for 5 years. So you may want to ask, is there an annual basis, and is there any penalty for taking out your funds, so that when you see opportunities, you can be able to take advantage of it to invest in higher yielding instruments.
And there's a strategy called laddering, CD laddering or fixed income laddering. I don't know if we have the time to take it in this course, but I will try to share an article I've done on laddering. If you are not sure of the investment rate and you want to invest in fixed income for a longer period of time, try to Google this. See, laddering, like a ladder, LADDER. Laddering is a way you can invest in fixed income when you are not really sure of that investing, the tenure, that the interest rates might change. So you ladder your investment, you break them down into duration bits, and then you invest. So instead of investing for 5 years at once, you break your investment into 5, then you put 1 million in the first year, 1 million in the second year, 1 million in the third year, 1 million in the fourth year, 1 million in the fifth year. So that every year you have a million naira maturing. So if rates are bad, you take your money and you go away. If rates are good, then you reinvest your 1 million again for the next 5 years. So you are doing the same 5 years, but you've broken out the maturities over time. So that's another good way that you can actually get access to invest in the fixed income market and avoid that reinvestment risk that's going to be a problem for you. So just try to Google laddering. That can give you a way. So we've answered that. I'm just running through the DMs, Ayo, real quick for you. So I think we've answered that question. Kalu, I have a question. This is from Ibrahim. Nigerians bought landed assets for loved ones as a gift. Do you think buying stocks, ETFs, it's a good question for you, Ayo. He's asking that instead of buying land, should he buy stocks and ETFs as a gift for a loved one? What do you think?
Okay, thanks. I think
that's from Ibrahim. Very good question.
Very interesting.
Yeah.
So if you have the funds or your target gift amount is able to buy the land, you need to confirm the area. It's not all areas that easily return interesting or give interesting return. So I would suggest that if it's an area that you feel based on past trend, land may give you higher return, but you need to do a lot of work. If you are not in the country, you are new to it, you are taking a lot of risk, and the return, the risk you are taking may not be commensurate with the return that would be there. But if you have the time or have someone to help you with the due diligence, I think land is good. Will give you higher return, or rather compared to buying fixed income instruments, you will be able to hedge against inflation. So that would be my take on that.
He's asking now that if he wants to give, maybe for Valentine, can he give somebody an ETF or a stock as a gift? He's also asking that how can he do this? If he wants to buy shares for his wife, how does he do this?
Okay, thanks. And very interesting question. So I don't know if some of there's what we call gift cards. So there are some investment outfits that have customized gift cards that you can buy investment and gift the investment. But I don't know which of the apps have that feature. And if they don't, you may want to it means you may need to give the funds to the person to buy the instrument, because when you are opening accounts, there are details that are collected. You can't open accounts on behalf of someone.
That is true.
And supply different details. So it's first confirming if you have platforms that have that gift card that you can do on behalf. So what they do is when you give them that amount, they will follow up with your friend or with the person to get details, to complete the details for the person, so that he or she can redeem when the investment has matured, or if the person decides to redeem that investment.
I think a good way I would advise is this: you can print out a certificate that says, I gift you 100 shares of maybe Zenith Bank. Do a certificate and say, with love from me. And then you give the person would hug you, kiss you. But afterwards, you can go and say, hey, please sign here. You can do that signing later on, but you've gifted the gift. The person has the gift. It's just how you do it. But like Ayo has said, the person has got to sign to open the account. So you can't sign on behalf of someone, but you can do the ceremony. You know how they give you those big checks when they give you like a donation, but you don't take those big checks to the bank. It's just for the photo op. So that's maybe a way that you can do that. So that's what I think. I think it's a good idea. During Valentine, I would say don't give your loved one a good stock. Give them an ETF, give them all that for Valentine. They would appreciate it. Do a nice, I gift you my love, this company that I love to, and it will be good, right? Let's see.
Yeah, very interesting.
Yeah, this guy is asking Andy. What's Andy asking? Okay, let me see. Alozie is asking. Oh, gee, okay. Can the secure investment house list be sent to me? What will try if you want to get investment houses, stockbroking houses, just go online to either Nigerian Stock Exchange, and you basically see all the stockbrokers. Really, they are all. Or go to SEC. I think on my TL I posted the link that you can use to check the SEC registration of brokers. I will post it again on that trend that I'm doing. So you can just go there, type the name of whoever your broker is, or just look on the list to show you all the brokers. You can basically then from there see if you'd like any one of them, right? What do you think? This is a very, very good question, Ayo. This guy is asking about what do you think about dollar cost averaging? Danny, I love dollar cost averaging, and dollar cost averaging just simply means that when you buy a stock, you have a plan that you just keep on buying that stock at set intervals. You ignore the market price. You are simply just buying the stock over and over and over. And it is used when you want to build up a portfolio and the price is volatile, going up and down. So you just keep on buying it. I love it. If you have a retirement savings account and all that, you should be able to just set this DCA up, like Ayo mentioned it, link it to your account and say every week or every month or every quarter, take X amount and buy shares for me. Just forget about it. Let's just go out of your account. Pay yourself first. I have read that over and over. Are you having any thoughts on dollar cost averaging?
No, I think you well said. So there's nothing to add to that.
Okay. Ayo, someone is come back. You said Bamboo has gift a stock feature, but the recipient Yeah, but it said the recipient has got to be a user as well. So yeah, so that's from Mo Gibbs. Mo Gibbs, thanks for that. That's very interesting. I did not know that they had that. So you can actually just give somebody a stock and all that if they are a user. But like they're not a user, I would just say get innovative, and give her take her for dinner and give her, I give you this, I give you that. I think that'll be very super. Let me try to just go down. I have a lot of DMs. Guys, I'm sorry I couldn't add anyone again. I think this is a big problem. Last week, I could not add people to ask questions, request to speak. Oh, let me approve someone. Oh, I just approved Des Kofi. Let me see if you can speak. Kofi, can you hear me? Let me see this guy can hear, so we can see if we can approve more people. I know I see people waiting, but I don't see them pop up on the screen. I think it's a glitch from Twitter, so I'll just try to move on to that. So let me just read more DMs. Andy is asking. Okay, Andy, we've covered that already. What Ayo, this is for you, sir. What KPIs should we look for when researching a company whose stocks we want to buy? This is from King Midas. He's asking, what should he look out for? What KPIs? What are the indices that you use when you're trying to pick up those companies to the NVIDIA, the Tesla? How did you get that list, sir?
Okay, thanks. I think the first thing I try to look at is I try to understand the sector where they play. I try to look at the potential within that sector. So if I know that the sector has great potential to grow. So speaking to Nigeria, for instance, the telecommunication sector has continued to grow, and we believe that there's more opportunity for them to grow. Data for MTN, their 2021 results showed 50% increase in data. Voice grew by just 8%. So which means that we know more people are using data, and the higher they go in terms of technology, you use more data on 4G than on 3G. So if they move to 5G, it means that the rate at which we would use data would also increase, which is more money for them. Average revenue per user, what they call ARPU in the telecom space, increased for MTN. That's the average usage for each customer, increased to about 4,000 naira per user from about 2,000 naira per user in 2020. So I see that there are opportunities there. So it means that they would make money or they will earn money. So once I'm first able to establish that, I also want to understand if they really pay out this money that they make out as dividend. So I can see the profit, but I'll also look at what do they pay out on a yearly basis. See, using like MTN pays out about 80 to 90% of its income as dividend.
80 to 90%?
Yes, minimum of 80% is their dividend policy. Nestle pay out as high as 99%, if not more sometimes, as dividend. So if I know that they have very good dividend policy, what is their last dividend? Can I use that as the least estimate to compare to the current price? What is the return I'm getting? If the return is fair enough, above, like you said, above the risk-free rate, and I would say for Nigeria, at least it should be 10% and above. Then you want to, or between 8 and 10% for some of those high cap stocks, you want to take position. Then you also need to monitor their quarterly results. So if I begin to see a trend of a decline, do you want to quickly reduce your exposure? If you look at GT Bank, Q2, they struggled that second quarter. Third quarter, their result wasn't that interesting. And we could see that impact. Their return on equity is almost matching with the return on equity for Zenith Bank. And you can see that investors have priced that in. Price is Zenith is almost trading higher than Zenith now. But if I now look at their business strategy and I expect that something will change in the future, it may be the right time to begin to accumulate or do dollar cost averaging on GTBank. So by and large, the basic matrix is ensure that you understand the business. 2, you look at their turnover, they are making money, is growing on a year-on-year, on a quarter-on-quarter basis. 3, their cost is not too significant, such that even if they are making revenue, they are also now making a loss or not making something interesting. You have to see that there's a profit, because it's when there's a profit that there will be a dividend. So if I see that profit is improving, then I also want to look at the dividend that is being paid. So just not to go very technical, those are basic metrics that you want to check. Yes, some people talk about PE, price to book, price to earnings.
Yeah,
they are all maybe derived from this. So if you are not used to the market, it may take you time that you're sitting down to compare price to the earnings per share, price to the book value per share. But if you have this basic, at least it will minimize your risk. That's the way I'll put it.
And somebody had asked me that someone says that he was advised to buy, or she was advised to buy stocks of companies she buys goods from. So she buys Maggi, so she's buying Nestle. She buys Vaseline, so she's buying Unilever. And is that a good strategy? Is that a good beginner strategy to look for necessities that have inelastic products and try to buy those companies that because they're going to get earnings?
Very well said. Companies that have inelastic demand for their products, so it's good to invest in them. So but you also need to look at how the cost of the company. So if you look at the margins, so when we say margins, just the ratio of BUA Food and flour mills. Flour mills, the after cost of sales, you see that their gross margin is about 10%. But for BUA Food, I think their gross margin is about 40 or 50%. So it's really very interesting. It means that in terms of efficiency, one is not as efficient as the other. So they are both playing in the same space. They sell almost semi-competitive products.
Yeah.
But one is more efficient than the other. So I would prefer to go for the one that is more efficient, and that gives me the probability that at least I will get dividend as a shareholder. So it's important to note, for us to note that. And I think something that just dropped my mind, just to advise for investors looking at equities market.
Yeah.
When you see market is seriously down, that is when you should be excited to begin to buy and hold. So I would say, for instance, in March, between March 2020, I think, and April, Zenith Bank came to about 11 naira. And I know some people that have locked in and bought at that 11 naira. So when you look at the dividend yield, they are getting close to 25-30% on an annual basis based on their cost. So it's not the time to run from the market, because what we typically see is when market is gaining, when you begin to hear people talk about the gain, that is when people get so excited and they begin to come into the market. So when you see opportunities that this market is trading at almost 52-week low, 3-year low, 4-year low, do your bit of analysis, understand why, understand whether it may still go further, and you may begin to use your DCA to begin to take position, buying in tranches to average down on your position.
Ayo, there's an interesting story that Warren Buffett asked. He asked a question. He asked, if you went into a restaurant and you were told that the pies that you like in that restaurant, that the price was now reduced. He asked, would you buy more pies or would you sell? He asked, what will people buy? And of course, the obvious answer is you will buy more pies because you like the pie and the price of the pie has gone down by half. So then Warren Buffett now asks, so why don't you use the same thinking in the stock market? If you like, quote unquote, Facebook, and the price of Facebook goes down in price, why don't you buy more? Why do you sell? And no one answers, because these things are very, very basic. If the company is good, and has good earnings, has got a good market share, and is projected in future to earn more, then the price is immaterial. The price is immaterial. If you buy the company, the intrinsic value, it's always going to be at the point of your determination. The market price is just Mr. Market and other people being irrational. And humans, like you said, are irrational. Humans are irrational. Last year, humans bought Hertz, a bankrupt company. They pushed the price up. The company was bankrupt, which means it has no value. But the market price was all going up and up and up. And in the US stock market, if you miss your earnings by 1 penny, you are punished by your stocks going down. But that is human irrationality. So, like you said, if the company is good, has got earnings, and has future earnings that are going to rise more than today, then the price to you really should be quote unquote irrelevant. That's just my take on that. You have to remember that price is not value. You want to buy when the price is lower than the value. There's a guy is asking us to explain ETFs, index, and index funds and exchange traded funds. Do you want to take a stab at it?
Sorry, ETFs and index funds.
Yes, so he's asking ETFs, index funds, what is the difference? An ETF and an index fund. He wants to be clear. We're using those two terms and he's getting a bit confused. That's Zombie Sensei is saying, listen, ETFs, for me, the index tracks a particular market or a particular commodity or a particular sector. That's the index. So the Nigerian All Share Index tracks all the stocks in the Nigerian stock market. An ETF can track an index or can track a group of securities or can track an asset class. There are even indexes that track same stocks, quote unquote, alcohol, cigar, and all that. So that's my way to explain it. Do you have a better way, sir?
Okay. Yeah. So let me also just add to that most times sometimes they can be used interchangeably. Okay. So ETF is a form of index, can be seen as also a form of index fund because you are tracking particular stocks. So, for instance, I can have ETFs that is focused on the financial services. Also, I can have financial services index fund. So, you are buying into stocks that are within that particular threshold or based on the criteria you have set for yourself. So, to me, I don't see much difference. It can be used interchangeably. It's when you are going into detailed that you want to begin to look out for what kind of similarities. Is it based on some taxes around some areas in terms of costs that they can also charge that may also vary? But I would summarize by saying that ETFs are also a form of index fund because they track the ETFs that track an index and there are ETFs that track stocks, and there are stocks index that are formed to track the particular stock. So for this Nigerian market, you have the Nigerian stock market. That you have the NSE 30 that tracks the top most capitalized and most liquid stocks.
Gotcha.
And I can decide to write ETF on the back of that index and sell it.
Excellent. So this question, of course, had to come. This question had to come. So I'm going to ask you the question. Quantum is asking you, what's your take on cryptocurrencies?
Okay, thanks. The first thing is understand the risks and the reward. Cryptocurrency is highly volatile, and it means that there's high risk. You can lose all your funds, or you can lose a lot of your funds. So what my view about cryptocurrency is also have that long-term. I have that long-term view about cryptocurrency, and I try to DCA when I see that prices are down. like I was buying more at the 33K levels. Now it's around 41. I'm not touching it for now, waiting for to see another dip maybe to the 35 or even if it will go to 25 levels. So that's having a long-term view. But I would always advise put what you know you can afford to lose if you are just starting, if you don't understand how it works, such that there's no major shock. It's really volatile. And if you are also going to buy, if you don't want to take a lot of risks, you can look at the traditional ones, those ones that are the more prominent, the Bitcoin, the ETF. And if you feel that you understand a bit of how the market works, you can also look at those that have smart contract. Look at what they are doing. If you feel that you understand a bit of how they are adding value to that ecosystem, you can also invest in them. Some are looking at
the metaverse.
Yes, metaverse. So you can easily just look at some of those things. And if you don't have the time to be selecting, there are, like we said, there are ETFs that I think covers crypto.
Yeah.
Or there are also funds that covers crypto. So you can look at that. They will do the selection for you.
Yeah.
And beyond that, there are also stocks that I mentioned. Mara, BTC, Bitcoin.
I think in
Bitcoin is also going. So you can also consider that. But by and large, if you are new, invest what you feel you can lose. It's highly volatile.
Yeah, I think in Canada they have spot ETFs for Bitcoin, but in the US they have not yet approved spot trading for Bitcoin for ETF. They are doing more of futures market in the US. So if you want to buy direct, you might want to go to a Canadian exchange also. So this is another good question. Ayo from X is asking, are dividends mandatory? Are companies bound to pay dividends year on year? Good question.
Okay, thanks. A very intelligent one. It's not mandatory for companies to pay dividend. And that is why equity holders always request for higher return. For any company, debt holders are paid first. It's mandatory if they borrow, they pay the interest, and it's what is left that equity holders are able to pay out for. So when you are investing, since you know now that it's not mandatory, if they don't pay you dividend for 10 years, there's really nothing. And looking at Nigeria and other developed times, in Nigeria, most investors are moved by dividend. But in other climes, people buy the future or the potential of those companies. You at least in most of the companies that were mentioned that have fundamentals hardly pay dividend. Some would do it in form of share buyback. So they buy that shares to increase at the higher value and to reduce the number of shares, which will mean that the share price would have increased. It means you can pay yourself. So they don't hardly pay dividend.
Yeah.
So you pay yourself. There are two forms of returns that you get when you invest in shares. There's what we call the capital appreciation, the capital gain. That's you buy at $4, increase to $8, you sell. $4, $4 increase. That's the capital gain. And the dividend return is based on the dividend and the cost at which you are buying. Those two forms of returns sum up together to form the total return on a stock. So if you are not sure of the dividend part, you need to be sure of the capital appreciation part. But in Nigeria, most investors go for stocks that pay dividend consistently. So check their last 5 years before you buy. If you are buying in Nigeria, have they been consistent in terms of dividend? Because even the pension guys, the way they are structured, they are only allowed to invest in stocks that consistently pay dividend mostly. And they try to check. So once you don't pay dividend, you don't meet that criteria. I think 3 out of 5 years. I may not be very accurate
here. Yeah, you're correct.
It's one of the criteria that they check. You need to, they will sell those stocks, so it impacts on the share price of the stock if you don't pay dividend in Nigeria.
Yeah. And I think the PFAs on the Nigerian Stock Exchange, there's a pension index. So if you use that pension index, you can also see the companies that have qualified to have their shares be held by the pension fund company. So one of the qualifications, like Ayo has said, they have to pay dividends for 3 out of 5 years. So that you then know who can pay dividends and all that. Ayo, we've been here for 2 hours. I know I nailed you down for 2 hours, but I have a ton of questions. Let me just thank you for staying and answering all these questions. We have, give or take, about 360, 380 guests listening that have basically stayed in here. So thank you so much. I have a ton of DMs. Once again, Twitter has not allowed me to allow people to speak. So I do apologize for everyone that has requested and cannot speak. It's just a technical glitch. I can't add anybody. So I'm just reading off the DM. So Ayo, do I have your permission to ask you a few more questions?
Okay, please go ahead.
All right, thank you, sir. So here's this Ekumeku is asking, the portfolio you gave, right? What he's asking, what is the minimum amount for someone to basically invest in? I mean, if he wants to start, should he have $1 million? Well, now we gave ourselves $1 million, but he's asking, what do you think is a minimum for him to basically start with?
Okay, thanks. And I would also say thanks to technology that there are platforms now that have been able to reduce the barrier entry for investment. So I mentioned, if we look at what we said, 20% for dollar funds, there are funds that accept just $100. You can now do top up. So your initial investment, $100, it means if you have $20, you can increase it with $20, $10, and you can top up. So that, I feel, is considerable enough. We also talked about foreign stocks. Because of fractionalization, you can buy 0.1% of Tesla or 0.1% of Apple shares. So it means that with $20, you can begin to invest in equities or foreign equities, and even the ETFs too. I don't think there's a minimum. You are able to also invest. And for fixed income, the mutual funds, for most of the mutual funds in Nigeria, minimum is around 5,000 naira. It means that you can grow it and you can top up with 1,000 likes. Treasury bills for most companies is maybe around 1 million, but there are a lot of firms that accept as low as 100,000 naira. So you can also begin to invest in treasury bills. Bond is the one that has that high entry level, some from 20 million naira. Standard for at the primary market is about 50 million naira. But you can invest in bonds through the mutual fund. So that entry level, I think, would be around 10,000 naira for investment in mutual fund. And for Nigerian stocks, most companies don't have minimum for you to invest. You are doing everything online. So you can transfer 100 naira and buy shares. So I feel that with this, it means that there's really no excuse. We can start low. If you have 1,000 naira, you can split them and begin to invest. Say for the dollar investment, when you look at it, $100 is about 55, or depending on the exchange rate, 58,000 naira. So you can start maybe accumulating it using your money market funds, and when you get to like 100, you can take out of that and move part of it to invest in dollar mutual funds. So I believe there's a lot of flexibility, and we can't overemphasize starting now, starting early, and don't wait until you have significant funds before you start. Start with what you have. Start small. Like we say, the Bible says, don't despise that small beginning. So please start with whatever you have.
I agree, Ayo. And when I say the point that you can buy Tesla from Taraba, I'm not just making a glib statement. You can actually, on those apps, as low as $10, you can buy a stock. So the point is not to wait. Don't wait till you have a million naira. You can start very small, buy $10 a month or a quarter or a year. Just get the habit of saving and investing. So that's very something that you want to do, and you don't basically wait until you have all that capital. So starting early is the biggest hack that you have. If you are very, very young and you start to invest when you are early, you make more money than if someone starts later than you and invests even more than you. So if I invest 1,000 naira when I am 10 years old and I invest for only 10 years, so I invest just 10,000, but I start to invest when I am 10 years old, and I don't make any investment till the next 30 years, right? I only put my 10,000. If you come after me and you start to invest from when you are 20 years old and you invest 2,000, so you invest double what I'm investing, I will still have more money than you because I started earlier. The time value of money, the way your money is compounded, works with time, not really the interest rate. It is raised over time. So mathematically, that's why Einstein called compounding the eighth wonder of the world, because the formula is raised over time. Hence, the formula is called the time value of money. So when you start early, you have a big advantage than if you wait till when you are earning money and you want to invest. So very important that you start very, very early. So Ayo, I have lots of questions here asking, can we purchase apps from this, stocks from this app, from that app? Yeah, I think we listed most of the apps that you can purchase stock from. There are lots of them: Bamboo, Raise, Chaka, Cowrie, Wealth NG. There are lots of them that you can basically go online. If you are outside Nigeria, you have the US Social Security number. You can try Robinhood, as if you're in the US. If you are in the UK, there's Revolt, there's 212. I think I'll give you a long list on that. Like I said, try not to mix it and all. If you have kids and you're in the US, Acorn is a very, very good app for you. You can actually buy stocks in your kids' names whilst they're like even 1 year old. So if you have a child and it has a social security number, make sure you get them an Acorns account. You can literally open a stock account or even a retirement account for your child, 1 year old guy, but you have to have a US social security number. I put the app there for you. It's a great tool. I don't know why Nigeria doesn't have that sort of investing where I can buy something for my child that is just born. Ayo, do you have anything to say, sir? I would like to start to wind this down. I'm respectful of your time as well. So I just like to wind it down. Would you want to basically give an overview? Where do you think, I think the question on the Twitter app was, where do you think Q1 will end? If you had to estimate, like, where do you see this going by Q3? It's an election year. There's no more subsidy. Or what I mean is that we've added back subsidies. So we've added about 2 trillion back into the portfolio, which means the federal government is going to come back and start to borrow again. If the federal government starts to borrow again, what will happen to rates? Should I be in shares or should I be in fixed income? What's your take, sir, as we try to close?
Okay, thank you. So I think the first thing is that with the expectation that government would borrow and they would also want to front load. So when we say front load is, if I'm to borrow 5 trillion for the year, I may want to quickly borrow 30-40% of that, if not 50% of them in the first quarter, so that I have money to start investing. So that would push interest rates up. But we may see that more of that in the fixed income, in the bonds market. Within the treasury bills market, the liquidity has been very high. January, February, liquidity will be high. We have maturity close to about 1 trillion coming in also in February. So that would impact on liquidity. So even if we're going to see an improvement in rates, it will be marginal. So what I would advise is, just take advantage of what is available for now. If you see interest rates move up to like the bonds level, if you are a long-term player at 13% plus level or almost approaching 14, you may want to lock in at that levels, because we know that government will be mindful of raising it beyond that level. So you need to have I'll also say have cash. In a pre-election year, we believe that the equities market will also be a bit volatile, and that would present opportunities. So when you have that cash, we were spoken a lot on dollar cost averaging. When you have enough cash, you'll be able to also buy now with the 2-year view that you have in mind, and you're able to get interesting return. So the direction of the market, I would say, more into fixed income, more into dollar investment, and as the year go by, you can be investing in equities. We believe that after Q1, results, interesting or positive results have improved sentiment in the market, and by the time results winds down, in terms of expectation would be lower, and as a result of that, we may not see buying interest. We also don't expect foreign investors to come in a pre-election year while they are still also battling with the FX issue. So that is not going to drive the market. Interest rates on fixed income, deposit rate in the bank, still very high. Most of the PFAs may be able to get over 10%. So that's a disincentive for investment in the equities market. Part of what pushed the market up in 2020 was the PFAs increased as at May. The exposure was, as at May of that year, the exposure to equities was around 5%, and they increased it to about 7 to 8% as at December of 2020. They've started reducing their exposure again to equity. So as long as interest rate on deposit is high, interest rate on fixed income is high, we will not see much interest from the PFAs, and as a result of that, we don't expect much improvement in the stock market.
Yeah, thank you, Ayod. I appreciate that. And just the last question for you, if you don't mind. There's a guy asking a very, very specific question. This is Chijioke. Chijioke is asking, he's 40 years old. He wants to invest. What is the most advisable investment to make if he's just starting out? He's 40 years old. From the street, he's saying he hasn't been investing before. He wants to start to invest. So at that age of 40, which is mid-career, retirement in Nigeria is about, if it's PFA, 50 plus, civil service about 60 plus. What can he do?
Okay, thanks. If I want to adopt this rule of the thumb and says you take your age from 100, that would determine your exposure to the fixed income or safe investment. So at 40, so I would recommend that maybe 60% of your investment should be in fixed income, and you do 40% in other assets, other asset classes. So fixed income preserve capital, because when you look at, for Nigeria, for instance, retirement age is at 65, so you have 25 more years to maybe work and be able to save. So you are getting to that level where you need to be careful in terms of the investment. But 25 years is also a long time for equity. So if you identify value stocks with the remaining 40% across foreign equities, Nigerian equities is also a good one. And those value stocks in the next 25 years, if they are consistent, but keep monitoring. Don't wait until 65 years before you discover that this stock has never moved, you have not gained. You need to follow the market. The economy is in a cycle. Some sectors can perform well within the next 3-4 years, and in the next 3-4 years, things have moved. Like what we're saying now, the financial services are the one that may perform well due to expected hike in interest rates.
Yeah.
So you may need to change a bit of your exposure allocation. So monitoring is also key. in investing.
I think it's interesting. Let me ask you a question, sir, for me. If MTN gets their banking license going, whether it's Momo or whatever, but they get a license that allows them to receive and send funds. They have the largest, should we say, is it subscriber base? They also have the largest merchant base. What do you think happens to the bank earnings? Is this going to be a negative effect on the bank, on say Zenith Bank, GT, First Bank's earnings? How do you see MTN playing out with the Nigerian banking sector in terms of my returns on my dividends?
Okay, thanks. So we would expect, based on the current structure of MTN and likes of Airtel Africa, I think they have close to about 1 million Momo agents, which means the agents are like those that distribute, so they help them in terms of cash transactions. So if they are able to leverage on that, and what I see the PSB, that the Payment Service Bank, would also do for them is that Nigerians are sensitive to transaction costs. So if banks, based on the continued high transaction cost, investors may typically just move to opening accounts with MTN. So MTN already has about 72 million subscribers. So if about 50 million subscribers, which is like times, is higher than the highest customer of one of the banks. I think Access has the highest, about 42 million customers. It means that a lot of people will dump the bank and they'll be using the payments and MTN bank. So it's also a bank. The only thing that they won't be able to provide is they won't be able to give out loans. You can see the likes of, there's a bank that attracts people with zero transaction cost, and that bank is doing very well in Nigeria. So I believe.
What bank is that, sir?
Kuda Bank.
Kuda, the online bank.
They'll tell you if you can. Yes, online bank, the digital bank that if you can transact about 15 transactions are free. And for instance, since I mentioned Kuda, StanChart, for instance, if you have your salary account with them, you won't pay transaction charges. These are some major considerations that customers look at when you in Nigeria. So if they are able to lower that transaction charges, I'm able to transfer because your MTN number may be your bank account number. I can easily transfer to you and I don't need to incur any cost. Most people that you transfer money to often, you just ask them to open the account. It means the bank will not be able to earn such income. So it's really, I expect that in the long run, medium to the long term, I believe that it will have negative impact. If the bank don't adjust their model of reducing transaction charges, because this is a very stiff competition, the only thing is that these banks can loan. And I know the way companies are always ingenious, they can even partner with some companies that are able to provide that loan services to their customers.
This is my fear, Ayo. I think you've just verified my fear. I see long term. Look at the MTN recharge card is currency in Nigeria. If I want to send money to my village in Ohafia, I take MTN recharge card, I send the MTN number to my village. They download in my village and they use that MTN recharge card to spend. And it's in every village. You can send money to your child in school by sending recharge cards. Doesn't matter if it's MTN. And I don't think the banks really understand. I don't want to really blame the bank, but I think that this is a big monster rolling down the hill, coming down on them. I don't think they've really understood what's happening and how that Nigerians really use banks for salary. And once Nigerians can get a place that they can do their transactions, they would go there because it's cheaper than going to a bank. Less than 3% of Nigerians have a bank account. So I'm just worried about if the Nigerian banks can easily turn that ship around. Facebook crashed 20% this week because people said they are not countering TikTok. What will happen to the short Nigerian banks if they don't counter, say, MTN, Momo, or Kuda Bank? That's just my worry about.
No, I think your concern is valid, right? And I believe with the way the banks have always been resilient in the past few years. They would look out for other opportunities. So what I see that may happen is that they begin to become more aggressive in lending to increase their interest income.
Which they are doing right now. I was surprised to see banks asking me to come borrow money. In the past, it was the other way around. Yeah, so I was surprised. So I think that's a good one.
Yeah, they're improving on that. So we would see that First Bank that has one of the highest mobile agents, I think has about 100,000 agents. So I compared to MTN that has about close to 770 Momo agents, which is really very high. So I believe it's going to be a lot of competition for the banks, and they will need to improve on their model.
Yeah.
In terms of bringing, and so if they also begin to bring down transaction charges, it means it also impacts on their fees and commission.
Yeah.
But they will need to stay right on that volume, improve on their platform, and like we're already seeing, StanChart, for instance, if you have your salary account, they waive all those charges for you. Other banks may be forced to also do that so that they don't lose a lot of customers.
Yeah.
At the end of the day. So it's really going to be a tough one for them, but because the opportunity of lending that with credit bureau system that people have access to, and I believe that the banks also have access to, they may begin to increase their exposure more to a lot of more, what I would say in quotes, risky lending that they always prevent. Because if you do analysis of all the fintech also lending at high rate on a monthly basis, most of them are also doing well. They're expanding lending in billions. So I know for some, yes, their loan loss may be, non-performing loan may be high, but you also see some that are also able to manage it. So I believe that banks would need to also borrow a bit from this and not just fund loans that have collaterals, loans that are greenfield. They don't support business just starting. Brownfield rather, and they don't support greenfield as much as you see some other firms. Loan companies support them.
Yeah, I mean, it's just a consent to put out there, so it's good that we're addressing it. And I have to do a spaces on these fintech apps. Some are very good, but some I think are just Shylocks in t-shirts looking for and giving out high interest loans. You can't give a loan for 25% and call yourself a bank or a fintech. I think that's an abuse of that term. So I'm just getting information. We'll have to do a special spaces on these fintech people and just call out some names and put them there on the spot so people can avoid them or avoid going to the bank. If someone is giving you a loan at 25% a month, that is not a loan. That is loan sharking. That's in some instances illegal. You can't come to Nigeria from the West and give out loans to Nigerians at 25% a month. And then start to write text to everyone that they know when they don't pay. I think it's illegal and I think we have to stop it. But let me also address this. Someone asked me a question, Ayo. He's saying that, can you give your friend money in the US to buy shares for you or for your kids? The answer is no. In the US, you can only open an account using a social security number. So even if your friend is buying shares for you, he's obviously buying it in his own social security number, which means he might pay taxes. So I would advise, if you can't, don't do it. If you can, do it, but don't try to buy shares in someone else's name. That's not right. That's not right, and you will get into a lot of trouble, apart from also the tax advantages. A good question here for you, Ayo. He's asking, this is from Damilola. Damilola is asking, when should you sell stocks? He's asking, should you sell the stocks that are yielding profit or sell the stocks that are doing very, very bad? It's a good question. So when should he sell? Should he sell when he has made 25%, or should he keep them and sell the ones that are doing minus 25%? What do you think, sir?
Okay, thanks. Very good question. And I believe that takes us to the monitoring I spoke about. So you need to understand the sector and the potential for growth. So if I believe that the agri sector or the telecom sector are well positioned within the next few years, and I have those stocks, I really don't need to sell them because there are still potential for growth. We also spoke about banking. Some people, if you check their portfolio, they may have 90% banking stocks. Now that we feel that there will be a lot of competition within that space, and a lot of the investors may not be getting as much reward as expected, you may want to reduce your exposure. So apart from if you are trading, then you can always exit if based on your set threshold. If that's for trading, which is always sometimes very risky, if for trading, if you are a short-term investor. But if you are a long-term investor, monitor those sectors. Once you see that there are no potentials or there are major policies that would impact on their survival, then you may quickly want to cut your losses and put it in those stocks that have greater potential. And that wrapping up with this is that, well, most times we try to restructure clients' portfolio, and you see clients are emotional about some stocks. You see some stocks that are losing, and the potential for recovery is slimmer, but they continue to hold on to it because of at a good loss and because of their affection for that particular company.
Yeah.
The advice is always to sell. So you sell even at a loss. So if the loss is 50%, why don't you sell and crystallize that 50% loss and invest in a company that may give you 20% return in the next 2 years, rather than continue to hold on to that 50% loss and you're not getting any, and there's no potential for upside. So restructuring is key, and will also help you to always optimize your return.
Wow. Okay. Ayo, 2 hours and 30 minutes, and you're still talking and we're still listening. Thank you, sir. So let me just wind this down, if you don't mind. I appreciate everyone that has listened and has stayed on task with us today to learn about money. This app and this space and my handle is all about economics, finance, personal finance. We want to raise the level of, should we say, understanding about money. It's our money, so I want to talk about it. I want to learn about it. So I want to invite people like Ayo that are professionals in this space to come in and talk to us. So Ayo, thank you so much for spending time with us this evening. We appreciate you. We wish you the very best. And we thank everyone that has stayed with us this long. Thank you, sir. Do you have any closing remarks?
Yeah, so I would just also like to appreciate the opportunity that you have given to me to be able to discuss these very interesting things that add a lot of value to people and help people create wealth. Thanks for the opportunity to discuss on your platform, and thanks for the listeners. I can see that the numbers remain almost close to 400 throughout the discussion. So thanks for your time. And what I would end it is, investment requires timing. It requires time. Create time, monitor your investment, and ultimately start now. Start saving now and start investing now.
Excellent.
Thank you.
I appreciate that, sir. Thank you so much. So my name is Kalu Aja. This is all we do here. My handle is FinPlan Kalu Aja 1. Do follow. We do the podcast on my Twitter handle. You see the podcast address is there. This recording will be on Twitter for 30 days, but then the podcast forever. So you can always go back and do a reference on it. We also write every week on Nairametrics. I also do webinars. And the whole idea is we want to talk about your money so that you can know about it better and you can use it better. Thank you guys for listening. I appreciate all of you. Have a very, very good evening and stay safe out there. I love you. Take care.